Good morning, Paul Georgie from Allendale. It's January 20th, 2011. The spotlight this morning is definitely on China. They got every angle covered. The first issue that we'll talk about here this morning is the China's growth. They released their GDP yesterday, showed over a 10% GDP, which has concerns now and that they may raise interest rates again, and that is putting a little bit of strength into the dollar and causing some weakness in grain markets in China at the Dalian Exchange, as well as here in the U.S. CME. The dollar is up 15, crude is down 68, and the gold down $18 as we speak. Other areas, China's attention is on a visit by their President who's coming into Chicago here this afternoon. Expected to make some type of announcement while in Chicago and possibly at the Board of Trade that they will be purchasing soybeans, is what the trade is anticipating right now. They're making a significant purchase of soybeans, and that's what's providing a lot of support underneath the soybean market right now. If this announcement is different than that, we're going to see some volatility in the grain prices. Some traders are thinking, well, it could be a corn purchase that they're going to announce. But overnight, Australia said that they have made a deal with China for 200,000 tons of feed-grade wheat already, and they're in the negotiation stages of making a much larger deal on feed-grade wheat to China. So that those areas are covered, and we're all watching and wondering what China is going to do here in the next 24 hours. Also, weather is less important now in South America. Argentina has gotten some rain. Most areas have gotten significant amounts, that is relieving some of the stress on crops in Argentina. However, there is a corridor of where soybeans are produced in Argentina that is still very dry. They've had some rain, but are going to definitely need more rain as we move forward here, and still in the stress stages, as Drew Lerner has explained in his comments here this morning. Now, you can get the full story from Drew Lerner this Friday afternoon, tomorrow at the Allendale Conference here in Crystal Lake. So we still got space available, and still would love to have you join us for that, starting at 1 o'clock tomorrow, going through 12 o'clock on Saturday. So still space available. Still would like to have you come and see us and listen to what will be shared at the meeting. The other thing that we've got going is the technical reversal that we had yesterday in corn. We made a new high, contract high, and then closed below the previous day's low. That technically is a key reversal, and we've got the technicians watching that very closely. If we get further pressure here today, we could see a significant sell-off there. Right now, we've got technical support at 631 to 634 area in the March contract. Soybeans got support at 13.75 to $14 in the March, and the wheat market's in a trading range yet, with resistance at this $8 area, 8.11 in the nearby contract, and then support down around the 7.50 area. The cattle trade, we've got cattle on feed report due out tomorrow at 2 o'clock. We've got the main number there is that people are watching is the large placements that's expected. 14% increase in placements in this December versus a year ago, especially in face of the high corn prices. And that's certainly why we've seen these feeder prices strengthen as we have seen over the last several weeks because of the demand for putting cattle in the feedlot. Another reason they used as the reason for the number of cattle in the feedlot is the dry conditions in the southern plains that they couldn't run cattle on the wheat pastures, so we put them in the feedlot, and that is another reason for that large placement number. We did have cash cattle trade yesterday at 106 in Nebraska. That's in the range of $1.50 lower than last week. We cutout values, select was up 128, while choice was down 90 cents. In the pork complex, cutout values there were 95 cents higher. The cash markets had a little bit of strength yesterday, but expect that we could see some pressure there as we move into the end of the week. And the hog futures complex is getting their lead from corn. So weakness in the corn is putting pressure in the hogs and some liquidation in those deferred contracts because of the ebb and flow of corn prices. So if you got any questions, give us a call. We'd certainly be happy to answer those for you. Again, we'd like to see you out here in Crystal Lake tomorrow at the Allendale Conference. You can just give us a call. We can make sure that we get you a seat. And we wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.